Hi, hello everyone, welcome back to my channel. In this video, a problem will be solved on calculation of input tax credit. Kindly watch the video till the end, like, share and subscribe the channel. If you have any comments about the video, please put your comments in the comment box. Now, let's move to the whiteboard. This is a problem on a calculation of input tax credit eligible on inputs. The question is here, Miss Swagata. Let me stress this one here. A registered dealer submits the following information for the month of October 2020. So the details are, so now let's insert 3 columns here. So particulars, amount, let me insert the symbol of rupee here. Then rate of GST. Details of purchases, raw materials, A, purchased from another state. So the amount here is rupees 10 lakhs. The rate of GST is 28%. Then the next one here, raw materials, B, purchased within state 20 lakhs. %. Next, number 3 here, raw materials, C, purchased from USA, costing rupees 20 lakhs, including BCD, that is basic customs duty, at the rate of 10%, that is rupees 2 lakhs, including of IGST. So the amount here is rupees 22 lakh 40,000. The rate of, here let me write that 28% here. Then the next one 18%. 12%, Then the next raw material D purchased within the state from a dealer who opted for composition scheme, that is rupees 5 lakhs, the rate of GST here is given as 5%. Then number 5, raw materials E purchased from SEZ in Bangalore, so the amount here is rupees 10 lakhs. The rate of GST is 0%. Then next, details of sales here. Details of sales. So in this, sale of goods purchased from interstate purchase and imported raw materials to a person of Hyderabad who opted for composition scheme let me stretch this much here. Yeah, scheme, so which is given as rupees 50 lakhs. The rate of GST is 5%. Then number 2, goods sold to an unregistered dealer of Mangalore, rupees 75 lakhs. Rate of GST is 12%. Then next, number 3 here, sale of goods to a dealer in Union Territory of Chandigarh produced from raw material B, rupees 15 lakhs. The rate of GST is given as 18%. Then number 4, sale of goods purchased from raw material D to a registered dealer in Belagavi, rupees 20 lakhs. %. Then last one, sale of goods purchased from raw material E to SEZ in Bangalore, rupees 2 lakhs. It's 2 lakhs. The rate of GST is given as 0% here. Then note note the purchases and sales figures given above do not include GST. Compute the amount of GST payable. So we have given in the problem the GST which is payable on purchases and the GST payable on the sales. So we should calculate the output tax and we should calculate the input tax so that we can utilize the ITC here. So now let us go for computation here. So calculation of, so let us first write down here as a solution here. Solution, calculation of GST payable. So now let me insert 4 columns here. That is particulars CGST in the bracket. Let us write rupees. Next SGST in the bracket. Let us write rupees. Then IGST in the bracket. Let us write rupees. So now let's compute here the first one, interstate sale of goods, where the interstate sale of goods is given as a sale of that is the first one, 50 lakhs. So rupees 50 lakhs Let me stretch this one here and make adjustments here. Rupees 50 lakhs at the rate of multiplied by 5%, which comes to so here it is interstate sale means, so IGST is payable. So now let's go for IGST here. Rupees 2,50,000 here. There is some problem. Then next, number 2 here, sale to an unregistered dealer of Mangalore. So here it is goods sold to an unregistered of Mangalore. It is 75 lakhs which is given. The rate of GST is 12%. So 12% of 70. So the rate of GST is given as 12%. So 6% CGST, and so what we will do here, say 5% of rupees 75 lakhs into, let me stretch this one here, into 1/2. Why it is 1/2? Because the rate of CGST and SGST will remain same here. So when you calculate 5% of 75 lakhs, it comes to 9 lakhs. So 4,50,000. So here also 4,50,000. Then next, number 3 here, sale of goods to a dealer in Union Territory produced from raw material. So here it is given as 15 lakhs. So 15 lakhs into 18%. Sorry, it is not 18. Yeah, 18%. So it is given as 18% of, let us take in the bracket, okay? So 18% of rupees 15 lakhs so it comes to, so IGST is to be paid here. So it comes to 2,70,000. So 2,70,000. Next, number 4 here, sale to a dealer in Belagavi. So the rate of GST here is 28%. So 28%, the value of the goods sold here, it is given as rupees 20 lakhs. So 20 lakhs multiplied by 1 by 2 because the rate of GST remains same here. So it comes to 5 lakh 60. So 5 lakh 60 half. So that comes to 2 lakh 80,000. So 2 lakh 80,000. So here also 2 lakh 80,000. Then there's a one more here, that is sale of goods, sale to a SEZ in Bangalore. So on which input tax rate is not available here. So what we should do here, just we will put dash here. So now we need to take the sum of this here. So here it comes, we will call it as a total A. So here it comes here 7 lakh 30,000. Then here also it is a 7 lakh 30,000. Then here it is 5 lakh 20,000. Then the next we will go here, that is one raw material A purchased from another state on which we should pay the IGST here. So 28% of rupees 10 lakhs. So the IGST payable will be rupees 2 lakh 80,000 here. Then next number 2 here, that is raw material B purchased within the state, so now 18% of rupees 20 lakhs, it comes to rupees 3 lakh 60,000. So multiplied by 1 by 2. So because the rate of CGST and SGST will remain same here, which comes to rupees 1 lakh 80,000. Then the next one here, number 3, that is raw material C purchased from USA So here this includes the IGST here. So 12% of rupees 20 lakhs plus, so he should also pay, that is 12% of that VCD which included there of rupees 2 lakhs. So the total payable will be, that is IGST payable will be 2,64,000. So here it is 2,64,000. Then number 4 here, the one more purchase is there. Raw material D purchased within the state from a composite dealer, so which is not eligible for input tax credit here. So just let us put a dash here. Then here also then no IGST is also payable here. It is within the state but from a composite dealer here. Then the next one here, the number 5, that is raw material E purchased from a SEZ in Bangalore. So even this is also not eligible for any ITC here. So just let's put a dash here. Here also. So now let's take the total of B here. So total of B. So here it is rupees 1,80,000 only. So here also it is rupees 1,80,000. Then now when we take the sum of rupees 2,80,000 plus 2,64,000, which comes to rupees 5,44,000. Then now we need to find the balance of tax here. So balance of tax payable in the bracket A minus B. So now A minus B means here 7,30,000 minus 1,80,000, which comes to rupees 5,50,000. Even similarly in case of SGST also it remains same. Now here it is 2,80,000 minus 2,80,000 minus 2,64,000, which comes to rupees, so 5,20,000 minus 5,44,000, that comes to 24,000 here. So this is input tax credit. Here it is more. So now we need to adjust this one here. So less adjustment of input tax. So here when we look into this table here, we can come to know that the input tax credit is there in case of IGST, which will be utilized for payment of first CGST, then followed by SGST. So here let me put in the bracket here so that it indicates a minus here. So 24,000. So here it is nothing, or you can put like a 0 also. Here this 24,000 is utilized. So 24,000 is utilized here. So the difference or the net GST payable will be, CGST is to be paid by rupees 5,26,000, whereas the SGST to be paid by the dealer is rupees 5,50,000. where here it is nil. So we should give a note here, that is materials purchased from SEZ attracts 0% tax or 0 rated GST. Hence, the ITC on the same will be nil here. So this is how we need to work out here. So thank you for watching this.